In this video, I'll be teaching on chart pattern. And what are these chart patterns and how and why are they important? In fact, not just important, why are they very, very important to your financial market trading success? And those are the things I'll be talking about in this video. So I want you to sit, relax, and watch this video to the end, because there are so many things that I'm going to be revealing concerning this chart pattern, most especially the conception or the misunderstanding of some traders between support and resistance and double top and double bottom. So just watch this video to the end, as I'm going to be explaining all that and revealing all that to you. Now, these chart patterns, they are the information that the market presents to you for you to make your buy or sell decision. And they are everywhere on the charts for you to make your buy or sell decisions. Now, there are two main types of chart pattern. We have one, reversal pattern, reversal patterns. Then number two, we have continuation patterns. Excuse me. Reversal patterns and continuation patterns. So what are reversal patterns and what are continuation patterns, and how do you use them? In reversal patterns, we have so many of them, but there are major ones that I usually use, and you find them most often on the charts. And they are one, or let me put here, or one. We have double top, we have double top, two, we have double bottom, double bottom, three, we have head and shoulder, four, we have inverse head, shoulder, inverse head and shoulder, or inverse head and shoulder. So those are the major ones that I use as a reversal, to spot that a trend is about to reverse. That is what reversal pattern does. Reversal patterns helps you to spot a reversal in the market, that this trend you are following is about to end. That's what reversal patterns does for you. And like I said, we have these four of them that I use: double top, double bottom, head and shoulder, inverse head and shoulder. At the top of the uptrend, or let me just complete them. So we have reversal patterns and we have continuation patterns. Then what are the continuation patterns that we have? The major ones. We have many of them, but the major one that I use is rectangle pattern. So this rectangle pattern is actually the only one that I use for continuation. We have many of them. We have channels. We have pennant, we have rectangle, and so on and so forth. But every other pattern, chart pattern, depends on this. Like, for example, if you are using a channels now, whether rising channels or falling channel and all that. If you are using channel, for example, channels still work with double top, double bottom. Without double top, double bottom and all that, you might not be able to use channel. I won't, if time permits, I will explain that at the before the end of the video. But the major pattern that I use and that you need to understand the market, and if you're able to understand these patterns that are listed here, is going to do a lot for you in the market. Reversal patterns, this double top, double bottom, head and shoulder, inverse head and shoulder, and continuation pattern, rectangle. So now, how do you leverage on this? How do you make use of these patterns? So for reversal patterns, you find them at the top of a trend, like this. That is double top. That is double top here. That is, you have the first touch here. Here's my marker. Here you have a first touch, second touch at the top of a trend. When you have a first touch and when the market or the chart or the trend is unable to make a new high in an uptrend, that is when you have a double top. Did you get what I said? When you are in an uptrend and the price is unable to make a new high, then that is when you say you have a double top. That is, and this is usually found. This is usually found at the top of a trend. So when you find this pattern at the top of a trend, that is called double top, and that shows you that the trend is about to reverse. So the moment you see this pattern here, be preparing. If you have any position, begin to close them. The buy position, begin to close them. Then we call this place a neckline. So I'm going to explain later how you make use of them. So this is a double top pattern. Then a double bottom pattern, you usually find them at the bottom of a trend. Like, for example, you are having I think I should continue with this. You're having a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, equal low, then break of structure. So the moment you have this in a downtrend, you have this pattern at the bottom of the downtrend, then we call it a double bottom. So the moment you are making a lower low, lower high, lower low, lower high, lower high, and it gets to a point, you couldn't make a lower low again, and you have an equal low. Then we call that place, that pattern, a double bottom, and that signals to you that the trend is about to reverse. So the moment you have an equal low, that the price is unable to print a lower low, that you have an equal low, then you should be preparing. If you have any short position, you should be preparing to get out of them. Because the moment the price break or breaks the neckline, you have a reversal already. So as soon as you have this equal low, there is a reversal. There is a potential reversal. But this pattern is not completed until you have a break of the neckline. So I'm going to explain that I'm about to explain how to make use of them. So that is double bottom. At the top of a trend, of an uptrend, you have a double top. At the bottom of a downtrend, you have double bottom. Now, the two of them, they are for, remember, I'm talking about reversal pattern, the patterns that tells you that a trend is reversing. So that is how you know that a trend is reversing, using chart pattern. So now the next one that I'm going to talk about is head and shoulder. Head and shoulder. If you look at this pattern that I'm trying to draw here, in an uptrend, you have low, high, higher low, higher high, higher low, higher high, higher low, higher high. Then all of a sudden, you have either equal low or a little break. Then you have lower high, then a lower low. So at this point now, we will say we have head and shoulder. If you look at this pattern here, at the top of this trend, is a reversal pattern that is called head and shoulder. And here we have the left shoulder, we have the head, that's why it's called head and shoulder. We have the head, and here we have the right shoulder. So that is why it is called head and shoulder, and it's usually found at the top of an uptrend, because the moment you see this particular pattern at the top of an uptrend, then you know there is a potential reversal. But the chart is not completed until there is a neckline break. So we call this place a neckline. A neckline. This is the left shoulder, head, and right shoulder. That's why it is called head and shoulder. And here we have a neckline break. So until the neckline, here we have a neckline. And until the neckline is broken, this chart pattern is not completed. So now the same thing on a downtrend. So when you're on a downtrend, you find that is where you find the inverse head and shoulder, as in like this. You have a high, low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low. Then lower, high, lower, low. Then all of a sudden, you have equal, either a little bit above, or you have equal. Then you have this, then you have this. So anytime you see this in a downtrend, this signals a reversal, and this is our neckline. So neckline is very, very important in all these patterns. So when you have this in a downtrend, at the bottom of a downtrend, so this is a shoulder. These are the two shoulder, then this is the head. The left shoulder, the head, the right shoulder. So these are the two major, or the four major chart patterns that you have as a reversal pattern that you should be spotting out for when you should be spotting out for on a chart for your reversal. So we have double top, we have double bottom, we have head and shoulder, then we have inverse head and shoulder. The inverse head and shoulder is found at the bottom of a trend, while the head and shoulder is found at the top of a trend. Double top is found at the top of a trend, while the double bottom is found at the bottom of the trend. That is what makes them what they are. Remember, in the forex trading or financial market trading, we always say trend is your friend. So the moment you are seeing this at the top or bottom of a trend, you should know that the trend is no more your friend at that point, that you need to exit the market. Okay, then the next one that I'm going to talk about is the continuation pattern, which is the rectangle pattern. And this one too, you could find it anywhere on the chart, and we call it continuation pattern. And it looks like this. When you see a pattern like this, on the chart, we call this rectangle. So here you have a line. Here you have another line. Then how do you trade this? You trade this when there is a break out of either of these two. That is why we call it a continuation. But most of the time you find this in the trend, in the trending market, that this is usually called consolidation. So when the market is trending and all of a sudden it begins to consolidate. So when the price is trapped in between two lines, that is, the market makers are yet to make decision whether to go up or to go down. And this can actually break either way. So when it breaks up, that means the market is going up. But when it breaks down like this, that means what happened, the market is going down. That is a continuation pattern, a rectangle pattern, and it's a continuation pattern. You usually find this in a trending market. The market has been going lower, it's been going in a direction, whether if it's in a downtrend, it's been coming down, all of a sudden you see the market begin to consolidate. They are using that time to make decision on whether the price should continue to go down or they want to reverse it. But before it is reversed, you're going to see a reversal pattern. But most of the time, this gives you a continuation. When you see this on the market, it's a continuation. But so you have to wait for a break. If you find this in a downtrend, and you see this consolidation, like for example, this, you find it here, like this, you are in a downtrend, and it begins to consolidate, then you should be preparing that there might be a continuation. They are just using this to make a decision in the market whether they should continue on. But most of the time, there is going to be a breakout, and as soon as there is a breakout, what happens? You enter yourself. You enter yourself, yes, because this is a sell continuation. Then if you have it in an uptrend, that is, in an uptrend, you are having this. So when the price is coming, it's going in an uptrend, all of a sudden you begin to consolidate. The price begins to consolidate. Then you should be preparing that the price will continue. But sometimes it might reverse from there. But before it reverses, it's going to give you a reversal sign, not this rectangle sign. But when you see this rectangle sign, it shows a continuation of the price. Then what you do is you wait for a breakout. Then after a breakout, retest, then you buy. Remember, in a downtrend, consolidate, downward downtrend continuation. In an uptrend, consolidate, uptrend continuation. So that's how you leverage on all these patterns, to know when the price, to know when to buy and when to sell, to know what the price is about to do, whether there is a price continuation or there is a price reversal. So when you see a consolidation like this, then you should know what to look out for. When you see all this pattern, reversal pattern, then you should know what to look out for. Then how do you trade them? At least you're able to identify them now. This is rectangle. This is head and shoulder, inverse head and shoulder, double bottom and double top. Then how do you trade them? In an uptrend, when you see this pattern in an uptrend, you wait for a neckline break. As soon as you have a neckline break, what do? You enter your sell. This place will be your entry, while your stop loss will be at the top here. Your entry, the moment you have a break of this neckline and close, we call this place neckline. This black line, we call it neckline. So the moment you have a break of that neckline and close, then you have your entry here, then you place your stop loss above here. The same thing in a downtrend. The moment you have your double bottom like this and the neckline here, so you wait for this neckline to break. As soon as this neckline is break and close, remember it must close. If it does not close, then you have no pattern yet. It must break before you have a pattern. The pattern does not complete. This pattern has not been completed until you have a neckline break. So as soon as you have a neckline break here, what do? You enter your sell and you put your stop loss under here. Okay? The same thing with head and shoulder. In an uptrend, the moment you sight this in an uptrend, what do? You wait for a neckline break. You've seen the left shoulder, head, right shoulder. Then you wait for a break of this neckline. Okay, the moment this neckline is broken, this is the neckline. The moment this neckline is broken and close, what do? You enter your sell position here. You put your stop loss above here. The same thing in a downtrend. The moment you are able to sight this in a downtrend, what do? You've seen the left shoulder, head, and right. You wait for a neckline break. Your neckline is here. The moment you see this neckline break and close, the candle must close above it here. If the candle does not close, that is invalid. But for it to be valid, it must close above. So the moment the candle close above this, what do? You enter your buy and you place your stop loss below this place. That is how to trade patterns. Then for the continuation, you are coming from an uptrend, from a downtrend, and you begin to see a consolidation. What do? You wait for a break. Most of the time, break to the downside. You are coming, is a continuation coming from up. You wait for a break towards the downside. As soon as the candle breaks and closes here, you enter your sell, put your stop loss above here. You put your stop loss above here. You're coming from a downtrend. Break your entry, your stop loss. You are coming from a downtrend, from an uptrend rather. You are coming from an uptrend. You meet a rectangle. You are able to spot a rectangle pattern. What do? wait for a break. The moment you have a break here, the moment you have a break here, what do? You enter your buy here, your entry, then you place your stop loss below here. That is number one way to trade all those things. Then there is another way to trade them. When you spot a double top pattern like this, you can wait as soon as the candle breaks the neckline, the price breaks the neckline, you wait for a reversal. You wait for a retest, either to retest this neckline. If the retest hold here and continue before you enter, or you wait for it to retest, just wait for a retest. Then the moment it's retested, but breaking is very important. Break, wait for a retest. The moment it has retested, then you enter your sell, so that you'll be able to reduce your risk. The same thing in a downtrend. The moment you spot this and there is a break, wait for a retest. When you wait for a retest, it can either stop here, use this place as a resistance, or it comes to this around here. Then you enter your buy from here, you still place your stop loss below here. There is a way to trade that. So when it's retested, you wait for a bullish momentum candle. The moment you see a bullish momentum candle, you enter your buy, place your stop loss, and that helps you to reduce your risk. The same thing here. You see a candle break, wait for a retest. The moment you see a bearish momentum candle, enter your sell, place your stop loss, and with that, you're able to reduce your risk. The same thing for the head and shoulder. After a break, you wait for a retest. Instead of you entering immediately and you place your stop loss there, you reduce your risk by allowing it to retrace. The moment it retraces and you see a bearish momentum candle, you enter, you place your stop loss here. The same thing here. After a break, allow it to retrace back. Then after you see a momentum candle, a bullish momentum candle, what do? You enter your buy and place your stop loss here. So with that, you are able to reduce your risk. Because, like, for example, this one, if you enter here as soon as there is a break here, if you're having 50 pips here, 50 pips stop loss here. But when you allow it to retrace to like half here, or to wherever you say bearish momentum candle, it might have reduced to 20 pips, it might have reduced to 30 or 15 pips. So that is just the essence of that. Then for this rectangle as well, what do? As soon as you see a break, like I said, you enter, but you can allow it to retrace as well. Retrace back to this level to use this place as resistance. As support, as resistance, yes. Or it retraces back into this place. Then after some bearish activities here, you enter, you place your stop loss, and with that, you're able to reduce your risk. The same thing here, coming from you are in an uptrend, you meet a consolidation. After a break, instead of you to jump in immediately that you have a higher risk, you can allow it to retrace. Then after it has retraced, either use this place as a support or retrace back inside this place and you see some bullish momentum here. You jump in. With that, you're able to reduce your risk. So that is how to trade patterns. We have seen the reversal patterns and we have seen the continuation patterns. So now let's go to the charts to cite some examples of these patterns. Like the first one that you're going to see here is, this is it. So if you are like this now, Euro USD is about to fall with this pattern that I'm seeing on the chart right now. What do you see here? Double top in an uptrend. Is this not an uptrend? You see a double top. This is an uptrend. Okay, a double top, a neckline. This shows that this the price Euro USD is about to fall. So this market is going to fall because it has broken the neckline, and you can see that it's dropping already. You can see that it's dropping already. Then, if you look at this one again, this is another double top, still in an uptrend, and this is your neckline. What happened after the neckline break? You can see the fall here, from here to here, 82 pips. You see it, where did you see it? At the top of an uptrend. That is double top. Now let's go and look for double bottom. Double bottom. Look for double bottom example. Where do we locate double bottom? We locate it at the bottom of a trend. We locate it at the bottom of a trend. Like this one now, this is a double bottom. You know, we are coming from uptrend from here. Or let me look for another better one that better explains it. Like, for example, this is an head and shoulder. We are coming from a downtrend. At the bottom of the trend, you have your left shoulder here. You have your right shoulder here. You have your head here. And this is your neckline. And you can see after a break, what happened? Price move up. You can see this is example of head and shoulder. I believe you still remember while I was doing my explanation concerning this. So you can watch the video again, that this is inverse head and shoulder. To get my explanation, you can watch the video again. So I'm looking for another one. We have seen double top, we have seen inverse head and shoulder. So I'm trying to look for more of them. Trying to look for more. I'm trying to look for more, especially the head and shoulder and double bottom. Same inverse head and shoulder. I'm looking for head and shoulder and double bottom. Now, this is an example of a double bottom. Where did you see it? In a downtrend. What do you have here? A double bottom coming from a downtrend, and this is your neckline. What happened after the neckline break? Although we still have this long tail, this is deceptive kind of. So here, and that is why you see that this price still come down here. So you can watch here, then you can also watch this place. So if you take this place as your neckline, a break, a retest, then a move. If you take this place as your neckline, what happens? This is your break, and that's why you see the move up. You understand? But this is a double bottom, an example of a double bottom in a downtrend. So those are the reversal. Okay, those are the reversal pattern. Then we have seen double bottom, we have seen double top. We have seen double top. Can see that it's moving already because of this reversal here. You know, in an uptrend, then you have this reversal, so it's dropping already. So I'm looking for, this is also, this is an example of head and shoulder. You have the left shoulder the head and the right shoulder. Then this becomes your neckline, although sometimes neckline could be bent like this. So this is your neckline. So as soon as you have a break, what happens? Your entry, your stop loss. You understand? So your entry, your stop loss, and the price begin to drop. So that is, you've seen a reversal, you've seen head and shoulder, you've seen double top, then you've seen double bottom. You've seen double bottom. Okay. Then we have also seen inverse head and shoulder. Here is that inverse head and shoulder. We have seen inverse head and shoulder. So that is how you spot them. So anytime you see all those patterns in the market, they are telling you something. They are giving you information on what to do. So now let us look out for a continuation pattern. Now a continuation pattern. A continuation pattern, that one usually a continuation pattern like this one now in a downtrend. What happened here? You have a consolidation here. You can see that the price is not making a new high or low from here until there is a break. You can see from here, no new high, no, until there was a break here. This is an example of a rectangle. Can't you see that is in the rectangle now? See, the moment it enters this box, begin to consolidate, moving up, moving down, moving until there was a break here. Now, what do you have? Continuation. Okay, what do you have? Continuation. So that is an example. So you can spot many of them. All you need to do is just for you to practice very well, for you to be able to spot this, for you to be able to spot those patterns. So they are there everywhere on the chart to give you some information on what and what you need to do. So when you see them, you're able to spot them and you know how to trade them, they are going to take your trading to the next level. So that is all yes, and there is something that I would like to say concerning all these patterns. Remember, I say something about knowing the difference between when you have a pattern or when you have a support, because many people, they, let me explain that on the Euro USD, because many people, they mistaken a pattern with a resistance. Like for example, on this AUD USD now, on this AUD USD, if you look at this place, I am not going to take this one for, some people will take this for double top. Yes, it's a double top. Isn't it? It's a double top. But something like this, I don't take it for a double top, because if you look at how many touches do you have here now? You have 1, 2, and this is the third one. This is not a double top, but this is a resistance. You understand? You find double top or double bottom, in a trend, whether uptrend or in a downtrend, whether in an uptrend or in a downtrend, that particular leg, like this particular leg now, this is where you look for your double top or double bottom. Because what do they do for you? They helps you to know whether this particular leg is reversing or is continuing. So you look for your double top only on this leg, and on a downtrend, you look for it only on that leg. But when you are in a downtrend and there is a pullback, you're not looking for double bottom. I don't look at that as a double bottom. I see that as a resistance. But you look for your double bottom or your double top on a particular leg. Like for example, now in this leg now, this is where you look for your double bottom. If you go to lower time frame now, before this guy pull back, you must see a double top here or any reversal pattern. So this is where you look for a reversal pattern, not on this entire leg. This is a resistance because there is a first touch here, second touch, third touch. This has become a resistance. The price is getting to this place and it's being rejected. But you look for your pattern in a leg like this, in a trend, whether in uptrend or in a downtrend. Like for example now, this particular one now, you can't really call this a double bottom. Okay, you look for your double bottom in this leg for you to know whether the price wants to continue or reverse. You understand? But for you to now take this together, yes, it's a double bottom, but I see this more of support than a double bottom. You understand? But you look for your double bottom. Well, this is coming down. If you go to the lower time frame now, you will see that this is a trend. At the bottom of the trend, this is where you look for your double bottom, not this entire leg here. This is a support line, a support zone. You look for your double bottom at this leg here, at this bottom here, on this leg, to know whether this price is reversing here or continuing. You look for your double top at this leg, this uptrend here, to know whether this price will reverse here or continue, not on this entire zone. This is a support zone. While you look for your double bottom, remember we say this chart pattern, they are for reversal or continuation. For you to know whether this trend is reversing, that is when you need to look out for your double bottom here to know whether this trend wants to reverse or wants to continue, not on this end. This is a support. You look for your double bottom from here. I believe I've been able to explain this to you, and if you have any question, you can please drop it in the comment below, then I'm going to respond to you. And if you have not subscribed to this channel, please do now, so that as soon as I upload the next educational video, you'll be able to get notification. Thank you.